Hello, everybody. Firstly, I'd just like to welcome you to this webinar where we'll be talking about US company earnings season and the opportunities it represents to traders. We'll also talk about what happened in the last company earnings season in January and the prospects for April's earnings season in what promises to be a record-breaking set of results for many companies. My name is Sasha, and I'm a financial analyst from the research department at ForeTrade. I'm delighted to have you with us. If you have any questions, I will do my best to answer them, or please call us and ask to speak to a senior account manager who will be happy to help. But before I go any further, sorry, just skip the screen there. Before I go any further, please take a moment to read our risk warning and disclaimer. I'm sure you know that although gains can be made trading CFDs, losses can be incurred too, and you need to be aware of this. Now, we would like to present our new offer that is exclusive to those watching this webinar. A special code will appear on the screen during the webinar, and I will repeat the special code at the end of this webinar that you can use to take advantage of our special offer. Be aware that this offer will expire in 24 hours, and it applies to all of you, not just second-time depositors. So please stick around. It will be well worth it. If you make a deposit within the next 24 hours, you can receive a balance bonus. If you deposit 1,000 euros, you will receive a 2% balance bonus. Deposit 2,500 and you'll receive a 4% balance bonus. Deposit 5,000 euros and you will receive a 5% balance bonus. Deposit 5,001 to 15,000 and your overnight interest rates will be covered for 1 month. Deposit 15,001 to 25,000 and your overnight interest rate will be covered for 2 months. Deposit more than 25,000 and your interest rate will be covered for 3 months. You are free to use this bonus however you choose, but you might find it beneficial to use it on one of our market opportunities. And a market opportunity, in case you don't know, is a one-page briefing containing market analysis. And our goal is to provide you with a simple-to-understand opportunity to trade in the markets. We will select an instrument such as gold or a currency pair and tell you our very best estimate on its price direction so that you can trade on it if you want to. Market opportunities are produced by the research department, that's us, of which I'm a part, on a daily basis, according to market conditions. A market opportunity consists of fundamental analysis, geopolitical events, and technical analysis that includes a pivot point and support and resistance levels. What you can see before you is a market opportunity. Here you can see fundamental analysis on what's going on with the pound-dollar currency pair. Below, you can see some geopolitical events that can influence the currency pair. It's important to look at the pivot point on which the calculations are based. You can see that encircled in the middle on the left-hand side of the screen. If the price reaches this level that you can see on the screen, this shows the right moment in our estimation to come in and open a trading position. You can see that this is a weekly market opportunity, although we have regular daily trading opportunities. You can see the trend direction here, which is up. It's important you know how to use the stop loss and take profit options. You have support and resistance levels on the right-hand side, on the bottom left-hand side of the screen. At these points, you can put a stop loss and take profit. And on the right-hand side of the screen, you have calculations. If you close the profit using take profit, you can expect those kinds of profits in red, support 1, 2, and 3. If the price is going against you, then you could potentially have a loss of the amount. Sorry, I got that the other way around. Resistance 1, 2, and 3. If the price is going against you, you can potentially have a loss of the amount you can see in red. That is support 1, 2, and 3. The pivot point is a starting price for opening a trading position. The support and resistance levels here are for daily, weekly, or monthly terms. Finally, profit and loss calculations are based on a one-lot trading volume. Earnings seasons are months of the year when a majority of quarterly corporate earnings are released. Earnings season usually occurs in the months immediately following the quarter ends results of the year. Earnings seasons fall in January, April, July, and October. For traders, this means that almost every large company on the market will report their results in these months. And depending on the results and previous expectations of analysts, this can have a great effect on the prices of the stocks you trade with, and is therefore a great opportunity. As an investor, you should also keep an eye on analysts who will give valuations which will state whether the current price of a stock is overvalued, undervalued before the earnings season begins. This month's earnings season kicks off in April, with major banks expected to report first around April 13th, with Netflix reporting, for example, on Monday the 16th. The busiest week will begin on Monday the 23rd, though, when Google, Boeing, Facebook, Twitter, Amazon, and Microsoft will all post their results. Corporate profits are expected to have accelerated again during the first 3 months of the year, offering investors some reason for optimism after a harsh stretch in the financial markets, which is why this is an opportunity for traders. The earnings forecast growth of 18%. Boosted by a recent corporate tax overhaul and a strengthening global economy, S&P 500 firms are forecast to report profit growth of around 18% in the first quarter of 2018 from a year earlier. A strong earnings season could reinforce the foundations of the 9-year bull market in US stocks. Share prices have fallen in recent weeks, with the S&P index down some 9% from its January the 26th peak. Wide range of uncertainties have increased concern among investors about a trade war and its implication on US companies. The fourth quarter was highly successful for most companies. Some 80% of S&P companies record earnings growth of 15% on a year-on-year basis. One of the most popular shares, Facebook, for example, surpassed revenue expectations for the fourth quarter in 2017. The company posted $13 billion in revenue. That's $400 million greater than analysts' expectations. That's some 47% up year on year. And 76.9% of companies have reported the fourth quarter of 2017 revenue above analyst expectations, which is above the long-term average of 60% and above the average over the past 4 quarters of 63%. In the S&P 500 index, sales were 1.27% higher than expected, and revenues exceeded expectations for 3.8%. As you can see on this table, it shows the latest sales and earnings figures by sector of S&P 500 companies. The biggest positive surprise in sales and earnings were basic materials, technology, and consumer goods sectors, whilst the largest growth was achieved by oil and gas, basic materials, and technology sectors, both in sales and earnings. On the other hand, utilities surprised, but in a negative way, while consumer goods had the smallest increase in sales and in earnings. As results were first published in January, the S&P soared in value and had its best trading for 20 years. However, markets were badly impacted by fears that borrowing costs would spike more than expected this year, threatening to slow growth for the economy and stocks. And in February, there was a correction on the S&P 500, which saw stocks sharply fall by over 10%, to then climb back to a decline of 3.8% in February. So what can we expect for these first quarterly earnings? Many analysts expect to see a strong earnings season, but it's important to keep in mind that market sentiment has been negatively affected by factors such as a potential trade war and Facebook's privacy scandal, which has dragged on many related companies and sectors affected or potentially affected. Those supporting a bullish earnings season point to President Trump's corporate tax reform in December, which should boost company earnings. Analysts surveyed by Thomson Reuters believe that first quarter profits for companies could average an 18.5% increase upon the previous year. According to Thomson Reuters, first quarter earnings are expected to increase 18.5% from the first quarter of 2017. Excluding the energy sector, the earnings growth estimate declines to 16.7%. The energy sector has the highest earnings growth rate of any sector at 75%. It's expected to earn $14.3 billion in the first quarter of 2018, compared to earnings of $8.3 billion in the first quarter of 2017. The materials sector has the second highest earnings growth rate of any sector and is expected to earn $7.4 billion in the first quarter of 2018, compared to earnings of $5.8 billion in the first quarter of 2017. 9 of 11 sub-industries in the sector are expected to see higher earnings than a year ago. The copper and paper packaging and sub-industries have the highest earning per share growth in the sector. If these sub-industries are removed, the growth rate declines to 16%. The real estate sector, on the other hand, has the lowest growth rate at 3%. It's expected to earn $7.3 billion in the first quarter of 2018, relative to earnings of $7 billion in the first quarter of 2017. 3 of the 8 sub-industries in the sector are anticipated to see earnings decreases compared to the first quarter of 2017, led by the hotel and resorts and healthcare sub-industries. If these sub-industries are removed, the growth rate improves to 5.2%. Before the tax cuts, Credit Suisse, among others, predicted a strong earnings season average of around 12% growth expected. According to the Wall Street Journal, S&P technologies companies are expected to post 22% earnings growth. It's also important to remember that historically, April is a good month for stocks. We've seen increases in stock prices in April for the past 16 years in a row. However, some investors are sounding a note of caution, since expectations are now high, so solid results rather than exceptional company results may cause disappointment and not trigger gains in stocks in line with profits. Technology giants such as Apple, Google, and Facebook results are awaited with interest. As you can see from the table, you can see previous results in orange. In white, under 2018, you can see that Facebook's revenue is anticipated by analysts to record $11.43 billion. When revenue results are released, a figure above this could influence Facebook stocks upward, and vice versa if prices would go if revenue results were lower than expected. At the last earnings season in January, we can see on this table that Facebook recorded $12.97 billion revenue. And here is the earnings per share table, with earnings per share estimated to be $1.62 billion for this quarter. Again, a lower figure may put downward pressure on its stock price, and a higher figure could increase it. However, as far as Facebook is concerned, there are other statistics to consider, including new users and the number of advertisers. Considering Facebook's current predicament, these statistics are likely to be more important than ever. And Facebook, as I was just referring to then, has been beset by problems connected to the Cambridge Analytica scandal, which uncovered the fact that Facebook partners like CA, Cambridge Analytica, have been able to improperly access and use data of millions of users without their knowledge. Regulators in the US, EU, and UK are now examining measures that can be used to protect user data, and many companies in the industry could be affected. As some of you might know, Mark Zuckerberg has appeared before House Committee today and is expected to continue his testimony tomorrow. Another popular share worth watching is Apple. As with Facebook, this table shows previous figures in orange, and analysts expect that revenue will total $61.24 billion this quarter. And in this table, you can see the estimated earnings per share figure, which shows a 2.67 figure. It's probably worth bearing in mind that Apple recently announced it would be expanding its operations by going into the chip-making business. Other popular stocks such as Tesla have faced difficulties in production, so investors will be watching their figures closely, and the markets will react if results are better or worse than expected. You can see that revenue of $3.38 billion is expected, $3.38 billion, that is expected. With all of these stocks, volatility is to be expected. Although perhaps Apple is less risky than Tesla or Facebook in current circumstances. Well, I hope you found this presentation useful. Mark April down in your calendar for stocks and keep in touch with us for the latest information in the companies you would consider or are already trading in. In case you missed the promo code during the presentation, this is your opportunity to take advantage of our special offer, which will last for 24 hours. The promo code is FTD1X. Again, we feel that it's a great option to use our special offer on the NFP or trade using one of our market opportunities, but the choice is yours. And of course, at 4Trade, we'll be following any developments that affect the markets very closely. So please do call your senior account manager if you have any questions or want to take advantage of the trading opportunities that this earnings season will present. Until then, goodbye, and please join us again at 4Trade soon.